Hi Ron, it's Stuart here. Hope you are all well. It's where are we? Tuesday, aren't we? It's the 18th of February. It's been a busy day so far. We've had overnight. We had the RBA as expected cutting rates. Let me just check everything's okay with the audio. It's usually the audio that's not working. Everything's okay with the audio. Like my outfit today, I've got my PropTrade t-shirt on. I've got my PropTrade hoodie on. It's actually quite a nice day outside. Blue skies shining. I'm back in my proper home office today. We had a bit of a problem with the Wi-Fi router yesterday. So anyway, that's been sorted out overnight. Yeah, what was I saying? Yeah, RBA, as expected, moved rate down. We had obviously we've had this meeting in Riyadh. The Russians, the Americans, and the Saudis hosting it. Three biggest oil suppliers in the world. I wonder if oil got talked about. Let me think now. Obviously, poor old Ukraine wasn't there. The Europeans have been sidelined. Big meeting of minds yesterday in Paris with Macron. Yeah, see how all things pan out. This morning, we've had actually quite good data from the UK. Actually, didn't put the calendar. I'm far too big on it. Let's get. You don't want to see all of me, do you? There we are. We'll come back to the dollar CAD in a minute. Obviously, we've 15-minute chart dollar CAD. We're at back over $142 and Canadian dollar weakening ahead of the inflation data due in about 12 minutes. The other key thing this morning, there's the RBA, 25 basis points, very much telegraphed. Aussie sort of peaked up on that. Actually, let's just go through them while we're talking about that. We'll come back to that in a minute. Come back to the Canadian dollar in a minute. So just to go through this, what's actually happened this morning. The majors, that was the Aussie. 3 o'clock this morning, there's a volatility as the rate announcement. 63.70 we went under 63.33 that key 63.50 area, I should say, sorry. Aussie initially rallied, but we just saw in the Canadian cross of the dollar's come back in the last hour or so as this meeting in Saudi has started to wrap up as well. So dollar back on the front foot on a daily basis. But as you can see here, we're sort of back to where we were ahead of the RBA's telegraphed 25 basis point meeting. As far as the higher time frame, we're still long this on an end of day basis. We had a really bad week last week, as we said. I put a note out last night. The final losses for last week were 267 points. So that happens. We started badly. We had a bad Monday, bad Tuesday, terrible Thursday was the big one, and we sort of evened out. I think we lost. I can't remember what we overall. We lost on about 40 pips on Friday. We had 6 trades on Friday, but Thursday was the killer. But that happens, and if you can't accept those sort of things on a either daily, weekly, each session basis, go and do something else, because trading won't be for you. The beauty of trading with the proptrade.com, you've got the parameters you've got to fulfill if you're going to be successful. Remember, these are simulated accounts, but they're real live prices with real live liquidity providers, so there's nothing false about it, and you can, if you can prove yourself that you can stick to the rules, you can hit your 10% or your 12% profit, whatever you challenge you're taking on. The world really is your oyster with this business, guys. It really, really is. And we've got I'll come to this at the end of the webinar, but the end of the broadcast, so the data's come out. We got a really good 25% discount in the month for new 25s. Key that into the website, and it brings a 10k account down to 64 quid. $64. What's up? 50k is 260. I mean, for $250 to get the ability to handle a 50k account, what you're missing on. If you haven't got a few $100s to invest in your trading, again, I'd suggest you go and do something else, because you need the capital, and that's what PropTrade gives you. So we're the people to help you here, and I'm here to help you. The whole team's here to help you, whether it's indicators, whether it's your psychology, which is usually the problem, your emotional stability about taking trades, accepting losing, dealing with winners, being awake at night worrying about your trades, it's all about finding what works for you. But anyway, end of the advert. I'll come back to that at the end of the session. So yeah, the Aussie, we're still long this. It's come down a bit today, as we've just seen in the last, literally in the last couple of hours. But we've been strong. Went through T1. I'll drag up the stop losses here. We just came within a smidge of that. I've pulled the stop loss up again this morning, so that's running quite nicely. We may have run out of steam on that, as we can see here, as we go down to the 15-minute chart. You saw it roll over in the last hour or so. So as the meeting's concluded, so the bounce from the RBA has cooled 63.45 for the Aussie dollar. The other big news this morning has been the stronger than expected data out of the United Kingdom at 7 o'clock this morning. We had earnings 6%. Remember the Bank of England's mandate is just to deal with inflation. It's not like the US where they've got a jobs thing as well. So this is adding to the argument. Earnings at 6%. Again, it's a big round number. It's back into the sixes rather than the fives. Showing people that have got jobs that are getting paid relatively well. All in all, remember we've got a rise in employers' national insurance coming in April as well. So unemployment had ticked lower or remained flat at 4.4%. It's better than the tick up was expected, but that's really quite strong numbers for the certainly the Bank of England to take into account about their inflation outlook and their chances of cutting. They've talked themselves into going in February, so whether they'll actually delay that on those numbers or not, I don't know. Gradual and cautious they're talking about, aren't they? But inflation is still ticking around. It's likely to get back to the 3% levels as well as we run through the rest of the year. But here in the UK, so we'll see. Obviously, across the Atlantic, looking like they're stalling potentially for the whole year. I still think they will go again, the Fed, but again, doesn't really matter what I think. And as far as Europe's concerned, everybody's talking about a 2% by the end of the year for the ECB, and quite an aggressive rate cutting policy. So we'll see how it all pans out. Obviously, the tariff thing is still swirling around. This whole, Trump's really pressed the accelerator when it comes to trying to push forward with tariffs and push forward with this, speaking to Putin and his henchmen. But yeah, anyway, see how it all pans out. So anyway, the point really, as far as intraday traders is concerned, if we look at sterling today, we're just putting pound in here. We look at it, sterling here against cable. We've had there's the 7 o'clock data. So we had a spike holding 126 through 126 and the day. You see, we've been drifting down all day yesterday from a hold of 126. So we held 126, and then by mid-morning we were back under 126, and we've again, as dollars come back in the last last hour or so, we've down and pushed a new low for the day down here at 125.82. So whether we'll recoup 126 on the data that's coming out. Remember, we've got Empire State as well as Canadian CPI later on. We'll see. So again, sterling's back to really where it was, ahead of that relatively good data, and then you can see we're pivoting literally through where we were yesterday as well. So we're back to even Stevens as far as cable's concerned, pound against the dollar. So yeah, relatively busy day for a Tuesday. Obviously, the political situation remains swirling in the background, and probably the major movers. So any comments from Washington, either directly from Trump later on, or I haven't seen actually any comments from the meeting. Remember, the meeting was led by what's his name, the head diplomat in the US now. Oh God, his name's just escaped me as I'm talking here. But with Waltz, who's the chief spy master, and Trump's long-term property developer friend from New York, Witz, who managed to sort of be part of the ceasefire agreement that was hammered out with Hamas and Israel. So they were sat around the table with the with long term. Well, I mean, these guys are like new in their job. They're not negotiators. They're not politicians. They're business people. Rubio, sorry, that's it, Rubio. I mean, he's a long-term politician, but he's very much a hawk as far as China and Russia is concerned. But very much naive compared to Lavrov, who's been there since the early 2000s. And there was another one of Putin's henchmen sat next to him as well. I think he's head of intelligence as well there. But anyway, the Saudis were smiling quite nicely because they got them around the table, got them to Riyadh. And as I say, I'm sure the oil market was discussed while we were there, and obviously Ukraine as well. Hence, excuse my skepticism. Where are we? We're still 3 minutes before the date, so I'll come back to the CAD in a minute. So let's have a quick look at how that chatter has impacted oil. And there we go. Meeting concluded, and oil has bounced up in this last 15 minutes as the meeting's concluded, but we'd been weakening all morning from 72.40 under $72. So again, if we just tick this up, the oil market, but we're sort of bouncing around, finding support above the key $70 a barrel, and this area here, this China tariff announcement where we went under 71. So 71's a current support area, but the trend remains to the downside, and we need to break through what is now a strong resistance here, the 20 and the 50-day here around about that 72.70 area, to the upside for this to move higher. So the trend remains to the downside as far as the oil market is concerned. That's that daily trend hasn't been broken from the shenanigans that were going on today. So let's get back to CAD crosses. And we'll actually start with we'll come back to this and we'll have a look at the dollar CAD itself, because that's the one that's likely to move the most. So trend, high time frame trend remains down. We were up yesterday and we're currently up today. So the bias today is to the upside. Let's have a look at the layout, the flat layout, just blank layout. This is the one from yesterday. This is our 21. I've got the super trend on here as well. So let's just should I take that off? Let's take that. Take that off for the 5 minutes. So there we are. So that would have that's triggered long there at 12:05. So this is the 21 EMA, the blue line, and the super trend is the red and green line, the thicker line here. MACD is also positive. RSI moving up. So header of the data, as the data is just about to break, we've gone to 142 again, or 142.9. So this has been long from 12:05, and we're now long for an hour or so. Out here, long again here, long again here, and the last trade was there at 1 o'clock as it's gone long here at 142.02. Obviously, a lot of indecision here at the top of the data. So let's have a look how the data's come out as it's rolling. Oh, it's still a minute or so before that. It's just still hasn't come out. Sunday. Let's just do today. Tuesday. Oh, it's got all everybody else in there. So it still hasn't updated. So Empire State as well as coming out, and that's been all over the place. The Empire State. This was, I think, a 7-8 month low. I didn't make a note of it earlier actually before we came out. Yeah, 9 month low, May 2024. Empire State came in at minus that low, expected to tick up quite significantly. So we shall see how the data comes. Unfortunately, this investing.com calendar doesn't update in real time. So let me just check another site as it's coming through. Right, so it's better, it's hotter than expected. So the annualized, the monthly number has come in at 0.1 of 1%. Has that come in yet? It's only showing me Monday, it's Tuesday. Canadian day, there we are. So it's hotter than expected. So we're seeing this pattern around the world, aren't we? This idea of sticky inflation, it won't go down, the services still holding up. It's the story we focus on the US and CPI and PCE, but we're seeing the same pattern around the world. Services inflation's holding up. We saw that strong earnings number out of the US, out of the UK this morning as well. So it's a beat across the board. The Canadians have their 3 ways of running inflation. They're called median, trimmed, and common. Then you get an average of the 3. The current average of the 3 is 2.3%. It was expected to be 2.4%. And it's come in hotter than that, hasn't it? So if we look at the commons come in at 2.2 from 2. The median at 2.7 from 2.6, and the trimmed from 2.7 to 2.5. So it's a significant increase in Canadian inflation. The core number for the month is 2.1% compared to 1.8 for December. And the monthly number 0.4 of 1% from minus 0.3. So again, there's a bit of seasonality in there, obviously, but that's a significant hotter reading for Canadian inflation than many were expecting. Empire State is coming just on the flip side of that, from a negative 12.6 last month to a positive 5.7. As I say all the time, it is a very volatile indicator, so don't get too hung up on that, but it's coming positive for the first time. No, it was positive last month, wasn't it? It's that's January's March. No, it's coming positive. Yeah, the big one in November, wasn't it, for the Empire State? So yeah, it's how long it's going to hold up there or not. I don't. If we look at the let me just bring this up on what I'm staring at here for Empire State. It's less significant, certainly less significant. So that's a February number, this positive one here. But you can see it's generally been pretty miserable last year, a year or two, for manufacturing. Generally, certainly, and in New York, we had that big blowout here ahead of Christmas for the November one. But it's positive data. It's so that the combination of the Empire State and the hotter CPI data is likely to have hit the dollar, and there we are, or lifted the. Actually, that's a 5 minute. A spike down under that key 142 level, so it reverses rally we'd had here, and we see where it actually finishes in the next 15 minutes or so. But certainly the rally for the dollar CAD to 142.10 is cooled significantly on that combination of hotter CPI inflation data for Canada and the better than expected Empire State. So we did spike as low as 141.82 here. So where's that as far as the day is concerned? Our day started around about here, didn't it? So our day low is in range, isn't it? Our day low was here earlier on, 141.80. Just put this on here. 141.80, so that may get tested again. So it's gobbled it all back, and this is our high ahead of the combination data, and the obviously conclusion of the meeting in Riyadh as well. So from a strong run from the low of the day to the high of the day ahead of the data, we've now given up that move. So let me just take the super trend off this, because it's a little bit. Just hide it. There we are. Let's just stop it too messy. Okay, so big reaction to the data, but interesting, we are still here on this short time frame. We're still holding over the 21 EMA, so that's biased positive. Let's see if this gets tested. The big 142 level. That's the big round number 142. We're still 2 pips above that at the moment. So on that strong number. If we just have a look at how some of the other Canadian crosses have performed. Pound, I can't remember if we're still off. Yeah, we're long pound CAD, so that's stopped us out on that. Let me just put the, don't think so. Can't remember. It's got the daily stop loss might be away. Why isn't it marked on here? Oh, it's the wrong setup, isn't it? That's why it's on that chart there. So is that stopped us out? No, our stop loss is here now, isn't it, on that one? So we're still, yeah, it's a flat, flattening the this rally we've had, and we're still in that one. Our stop loss is there now, wasn't it? 78. I'll move it to this one. I'll move it to 78.48. That's right. 78.48 was the stop loss this morning. But so we're down. I might pull that up and see how that rolls out. The key thing was yesterday's reason we're still in this one. We've still got half position. I might add to the position actually. It was a strong close above the 50-day moving average. So see how we finish today for pound CAD on the end of day basis. So if we just look at a similar reaction, we go back to the 5-minute time frame. There's the strength of the Canadian dollar following the strong inflation data, and it's where are we? We are 5 minutes in, so the first 5-minute candle's completed. It's a long rejection of lower prices, so biased again might be to the upside, the weaker Canadian dollar. CAD against the yen, similar pattern. CAD lifted on the hot inflation data, but the trend here on this 5-minute time frame remains down for CAD against the yen. The daily basis is still negative from a rally to the 50-day moving average last week, and we've been down for 3 consecutive days. Thursday, Friday, Monday, and we're down again this morning. So see if that can perk that back up. But so on a short-term basis, it's positive, but remains in a longer down frame, down trend with a stronger yen. Although the CAD's obviously ticked up that against the euro CAD, similar sort of pattern, but again, a bit of sideways action. Nothing to get too excited about. No significant trend on that one in the short term frame. That higher time frame remains relatively weak, although we've rallied back to the 20-day moving average, but it's bumped off again. So rolling over to the downside. So let's have a look elsewhere at the other market moving news today. So the other key thing that happened this morning was the German where's it gone? Here out the German ZEW. Remember ZEW? It's a major institute, economic think tank, but statistical institute, gauging businesses and consumers in Germany, and it's not as bad as expected, shall we say. So current conditions have come in at minus 88.9, minus 88. They were expected to tick up a little bit, but they've been, what more can you say about German manufacturing in particular? It needs to turn around. So minus 88.5 and consumer sentiment 26, starting to tick up, moved up. Obviously, we got German election. We'll talk about this a few times this week. On Friday, Merz is expected to be the new Chancellor. Scholz was at that meeting, obviously, yesterday. But quite hawkish towards Russia. STP, the Greens, are quite hawkish. But obviously, the big unknown is the right-wing ADF, Alternative of Deutschland, expected to gain up to 20% of the German vote, particularly in the old East Germany area, the eastern parts of the unified German state. And then so we've got the far left. We've also, we've got the far right. We've also got the far left in German politics as well. Big coalition consensus in Germany. So see how the far left do as well as a reaction. So centre, Scholz's party, very sort of unstable government's fallen, and see what the numbers look like on Monday night or Friday night, Sunday night and Monday morning. The impact that has on the euro and the stock markets. Obviously, the DAX has been running to all-time highs. A bit quieter. It's come off a bit today when I was looking earlier, 22,800. But you know that trend remains very, very set. Combination of the boost for defence companies, German manufacturing might finally get a lift from any peace dividend that comes out of the Ukraine-Russia situation. The flip side is obviously the tariff situation with exports to the US. But as far as the DAX is concerned, it's not interested in that. The trend is running, it's running, and it's running. So the 20-day is heading towards the key 22,000 level. Another strong day yesterday. And we're a bit cooler today, but there's no reason to get off that trend off that trade at all. Elsewhere in the UK, in Europe, the wider where's it gone? The Euro Stoxx 50, just similar to the DAX market. Strong rally for 2025. Across the water, across the English Channel in the UK, the UK FTSE has dipped a wee bit on the stronger sterling move last week. It's bounced. It was back up again yesterday, and it's back up again today, 8,785 currently. So again, another one. Less of a smoother rally than the DAX, but certainly it's still winging its way. It's still sort of winging its way, impulse retrace on the way up to the upside for the FTSE as well. So it's still moving higher. Across the ocean, across the Atlantic, obviously markets were closed yesterday in the United States. Futures remained open, and the consolidation at highs continues. The Dow is at 44,600 plus. Holding nicely above the 20-day support here at 44,400 now. The Nasdaq Nasdaq 100. This is 22,240. New all-time highs here on the futures market for the Nasdaq today. 22,3070. So we just reached that one from December. Look at the weekly chart, was looking really interesting at the weekend when I was looking at it as well. Strong week last week, closing above that 22,000. It's quite a significant break. I think I showed you this before, having a big strong break through this down trend line here on the weekly chart. So as the earnings season is coming to an end, the future is still, people are still talking about, you know, a strong end or strong fourth quarter as well as a strong first quarter for the US stock market. So a break over 22,000 last week was very significant here for the Nasdaq. Let's go back to the daily time frame. So again, that remains a bid. I mean, it could be some shocks to the downside, but the reduction in expectation about rate cuts and rates staying high for longer hasn't really impacted the outlooks for earnings, and so stocks remain rather robust, surprisingly, but benefiting perhaps from the Trump tariff situation. But we'll see as it all pans out. As I say, as a trend following trader that's broken out here, this is the big move we saw on Thursday above this downtrend line here on the daily time frame, and followed through Friday. Quieter day yesterday, obviously, because it was closed. That's a technical cross, and you know, futures ahead this morning. S&P, similar move. People talking about 6,600 for the end of the year. Another strong Thursday took us back over that key target area, the 6,100 level, followed through again, and today new all-time intraday highs as well for the S&P 500, and just for that's all three of them, isn't it? Yeah, that's for all three of them. We're complete. While we've got the indexes on here, we were long. We were long Japanese stock market from the 12th. We had a really good run on the 13th on Thursday. Give it all back on Friday. I nearly closed it out on Friday. I was getting a bit really twitches. It was down here. I held it over the weekend, but I got bored with it this morning. I've closed it out. It just doesn't seem to want to break away from this 50-day moving average. So I've taken some margin off that, and we've closed that for some, I can't remember how many points it was. It was half a position. It was 36.92 points it equates. So remember, this is huge numbers here with the Nikkei. So percentages, it was a negligible percentage gains, but from a points, it was quite a big points gain. But it was a half a position. Yeah, we closed it at 291.12 from 32,217.58. We closed it at 32,291.42. So for we're actually, our first close trade of the week is a positive one of 36.92 pips on an end of day basis. But we'll play with it on when I'm watching on a day basis. So basically, the upshot is the US stock markets continues to rally at all-time highs. DAX is at all-time highs, and the FTSE is just shy of all-time highs. So stock markets remarkably holding on. The actual cash markets at the moment, they're still 40 minutes to open. The futures up about 0.5%. Yields are higher as well, but down on the day. US yields, key credit indicator. Metals, let's just finish with Bitcoin and gold. If there's no particular questions about anything, guys, let's have a quick look. There's no questions in the box now. Gold continuing to recover to this week from Friday's sell-off. That was simply, taking stress off the table. Unknown what might happen to the weekend. This meeting was scheduled about the war. End of the war takes some of the geopolitical risk away. But since then, we've bounced again. We were into the 9-period moving average. It hasn't broken here. As you can see, this fantastic run for gold. Adding on big candles. Last big ad there for me was the 10th, but it's not something I'll put up on the trading profiles. But again, positive day today. We bounced and we're up again. All-time highs from last week took us to 2945. Sorry, it was 2943 it was, wasn't it? Chatter of 3,000 still talks. There was an article I was reading this morning talking about 3,100 for gold. A lot of the geopolitical support could disappear quite quickly, but we've had 6-7 weeks of positive run. It is seasonality positive for gold this time of the year as well. The central banks are buying, institutions are buying. That's not going to go on forever, but as I say, just stay on that surfboard, stay on that trend. Don't get panicked and rushed out. The 20-day moving average is now at 28.36 to the upside. And gold remains very much in demand with the swirling news flow and unpredictability of the new government in the United States. So there we go. Hotter reading for Canadian inflation. Not a particular surprise, in that sense, because it's been ticking up globally. Hotter jobs numbers for the United Kingdom. Australia, RBA moving relatively aggressively, 25 basis points, relatively aggressively, given that it was anticipated. We had a lift for the Aussie and it's cooled, it's giving it back. We had a lift for sterling and now it's giving it back following the jobs report. And the Canadian dollar did it? Let's finish with the Canadian dollar. Dollar CAD. I don't want that one. I want this one. Dollar CAD now at 142 again. So as it's hung on to 142. That's a 5-minute chart. So I'll just set it up. So there's the spike down. So it's sort of the dollar is back ahead of the Canadian dollar's weakening on that. So we are back over 142. Following the hot inflation numbers. And that's about it for today, Tuesday. Tomorrow is the probably the event of the week, although it's It's a look, but a look backing event. If we go to tomorrow, big event is obviously later on in the day when we have the FOMC minutes. Where are we? 7 o'clock. Where's it gone? There we are. 7 o'clock. FOMC minutes. I'll be live for that as well, guys. Tomorrow. We also got inflation from who's got inflation? Is it euro area? Somebody with inflation, isn't it? Yeah, it's PPI and CPI UK. That's it. See what that's looking like tomorrow. 3.7% could be hot again tomorrow out of the UK. We'll see. Obviously, we also got the expected rate cut from New Zealand first thing, but I won't be around at 1 o'clock in the morning. Thank you for that. But expected rate cut from New Zealand. If we look at the major movers today, you can see that the Kiwis, the weakest of the major currencies, on anticipation of this quite significant 50 basis point cut from the RBNZ overnight tomorrow. So again, see how the market reacts to all of that. Oh, interesting scheduled speech from the man himself at 2 o'clock in the morning. I wonder what that's all about or where that's from. I don't know if Forex Factory's got that for tomorrow. 2 o'clock in the morning. Yeah, he's not on. Oh, there he is. Where's he? What's all that about? Due to speak in a joint interview along with Elon Musk conducted by Fox News. So the official president and his deputy, not official deputy, Mr. Musk, will be interviewed. I'm sure it will be a very rigorous interview by Fox News at 2 o'clock tomorrow morning GMT. So I'm certainly not staying up for that. I'll have a smile at the outcome of that later on. So obviously market moving events, potentially the pair of them. I wonder if they're both going to be together in the studio. God bless Fox News, eh? Anyway, enough of my cynicism. Let me leave you with a dollar CAD. Back over 142 from a quick spike to 141.85 on the data, and that's still looking relatively positive. The day high at 142.12. Are we going to have another go at that? Well, it's much more likely to go higher, given that we're at these levels. Yeah, we need to get back to these early morning levels, don't we, first? Than the spike to the lows of the day, which we sort of tested on the data coming out. So we're biased to the upside dollar CAD as the American markets open in half an hour, and all the American traders are at their desks now for a jolly Tuesday, having had a long weekend for President's Day yesterday. So take care, everyone. I will see you tomorrow for the FOMC. Stay safe, stay warm, and may the pips be with you, my friends. All the very best. Take care. See you soon. Bye-bye. Don't forget, actually, before I go, let me just flip back to our products here. Remember, as I said before, let's have a quick look. It hasn't held it. So coupon, current live coupon, as I said earlier, is new 25. So 25% off our across our range of challenges. So you know, say $50,000 account now can be yours for $260, 25% off. That's $345. So you know, it's quite a significant. That's a big significant account. 50,000, 25,000 for $130 from $175. Type in a code, come and join us and prove yourself and you know, get that funded account and get those payouts. Okay, remember 90% to 90% profit share start at 80% up to 90% for funded accounts. So come and join us, my friends. All right, take care. See you soon. See you tomorrow for the FOMC. See what the minutes have to say and how that's going to move the market. But obviously before that, we got the RBNZ and Mr. Trump